Money never sleeps, pal.
Hey there, welcome to Money Never Sleeps, a podcast that looks inside the head of entrepreneurs and at what makes them do what they do. I'm Pete Townsend, your co-host of Money Never Sleeps, along with Owen Fitzgerald. This episode of Money Never Sleeps is kindly sponsored by Ireland's Fintech and Financial Services Recruitment Specialists, Top Tier Recruitment. If you or a colleague need help attracting and retaining great talent for your fintech or financial services company, it is highly advisable that you build a relationship with a team at Top Tier Recruitment. You can find them at toptierrecruitment.com and tell them we sent you. In this episode, Paul Smith and I talk through a recent blog post from the inimitable Chris Skinner, where he goes through the myths of finance and technology from the perspective of Ann Boden, founder and CEO of Starling. So why don't we just get right to it with this week's episode of Money Never Sleeps.
Money never sleeps, pal.
Here we go again. Welcome to Money Never Sleeps. We're recording today from the offices of our sponsor, Top Tier Recruitment, to get inside the minds of entrepreneurs that are not talking to us at the moment by looking at a recent piece of content that struck a chord with us. I'm Pete Townsend.
Paul Smith.
And let's just get on with this and see if we can make this work. So, Paul, thanks for coming on
Very
to
welcome.
the show. Again, you're becoming kind of a fixture as a fill-in here every now and again when Owen's not available. And as we said last week, when Owen Fitzgerald isn't on the show, it's a good thing for Irish startups because that means he's going out to get the money.
Exactly.
Right? So, but great to have you here. You bring a different angle, which is I always appreciate. So thank you.
Very welcome.
So, Paul, what you and I are going to look at this week is that just last week, as of the date of recording this show, it would have been 2 weeks ago, Chris Skinner, who runs a blog, and I'll just, that's probably not doing him a huge service by saying he runs a blog. It's called thefinancer.com. He's a speaker, influencer, author, all around good guy when it comes to talking about finance, technology, and fintech, and knowing that fintech isn't necessarily the combination of finance and technology can mean a lot of different things. So he's out there on the speaking circuit quite a lot. He does a daily blog on the Financer.com. He has some close relationships with the group 11FS that I spent some time with last year. So met him a couple times. And I wanted to get into something that he wrote, and we'll put the show in the show notes. We'll put this into the link with 7 fin and tech truisms that we wish were myths, with thanks to Ann Boden. Ann Boden, as how some of our listeners may know, is the founder and CEO of Starling Bank, one of the challenger banks in the UK, and probably the one with the longest tenure out of kind of the newer ones between. At least between them and Monzo. They've been around a couple years longer than Monzo, and there's a bigger story to that, obviously, between Starling and Monzo that we won't get into. But an interesting local twist on this is that Elaine Dean, who previously was on the show, I think she was episode 23, 24. She was the founder and CEO of Pocketwire. She is now the new country manager for Starling Bank here in Ireland because Starling Bank are moving and expanding their business to Ireland, which is a great thing, and personally very much looking forward to seeing that happen. So Ann Boden was up on stage at an event in the last couple of weeks. It was at the New Statesman Fintech Summit. Chris Skinner gave the opening speech. Ann Boden then got into going through what she saw as a number of the myths in the fintech world. And we're going to dig into that. The first one, myth number one, fintech startups are founded by young white men. Now, Chris went through his analysis of that, and his conclusion was that it was not a myth, that fintech startups are in fact founded by young white men. I personally see, yes, are there a lot of young white men starting fintechs? Yes, absolutely. But largely, if you look at where all that activity is happening, the biggest fintech centers around the world are in the US, right, as well as in London, right? There's a lot of young white men in both of those countries. Is this a population thing, or is this a more of a cultural thing where it's more young white men that are encouraged and supported or is it just like I said, a population thing? What do you think?
How do you define young?
Well, right.
Would you consider yourself young?
I'm not young. No, Paul. You and I had this chat recently about who's younger.
Yeah.
Right?
You discovered how old it actually was.
Yes.
Put a good 5 years.
Yeah, exactly. Sorry about that. But is this guys in their 20s that are doing this? Personally, when I look at my 20s, I did my MBA when I was 23. I was in no way prepared for that. And the people that were in my cohort, my MBA program at Boston University, dragged my ass, right? They carried me. Can people in their 20s be that much of a visionary, that well experienced to actually build a massive fintech startup from scratch?
Yeah, I think it depends. I mean, there's always going to be anomalies out there. Facebook, Mark Zuckerberg was pretty young when he started Facebook, and that turned out okay.
The Collison brothers turned out okay.
Yeah, exactly. But for every one or two of those guys, there's always going to be a whole load who haven't done well and haven't made it, I suppose. I think more around the male-female thing. I think it is cultural. I think there are still those barriers or perceived barriers for women in general in the workforce, including in entrepreneurship. Myself and Laura were talking to Coral from Girls in Tech recently, and she was kind of talking about having the opportunity there or having the people to look up to almost from a female perspective to show people or to show women that they can go off and do a startup or whatever. I think it is something that is probably changing a little bit as you see more and more women do well, not just in startups but in general. So I would see it as something that is going to change, but it is a man's game at the minute for the majority of cases.
Well,
I think.
I mean, like we mentioned, encouraging people like Elaine Dehan, and I still can't get the Irish pronunciation of that name right. It's probably rhymes with Sheehan, doesn't it? So it's Dehan instead of Dehan, right? But when you meet people that are doing it, for example, when I met Elaine, she had just been through a massively fortuitous set of experiences between leaving the corporate world, where she had done a stint with Citi and had that point of a conversion in her mindset towards going out to solve problems. And she's a very, how should we say, she's a very energetic person, very genuine person, very, has this great leadership quality that I just wanted to push and encourage and just say, listen, just keep doing what you're doing and do more of what you're doing. Now, the reason why she moved on to Starling Bank, we should get her back on and have her tell that story, which is quite an interesting one, but it's just a matter of, luck, right? And timing and those types of things. So seeing what she's doing now, I think is a good thing and will hopefully, turn the tide. We see a lot of that happening in the US, but we need more and more of that happening over here.
Yeah, definitely.
Myth number 2, banks are run by old white guys. Now, again, when I left BNP Paribas 3 years ago, I wasn't yet an old white guy, but I definitely was a white guy. And I was at...
Still are, I think.
Yes, thank you. No, I haven't changed that yet. There is a certain level of turnover that I think, or not even turnover, but a certain level of institutionalized culture, institutionalized trends, norms, that yes, if we were to look back 30 years in banks, it was obviously full of men and full of older white men, and that has continued. And but are things changing? I think they are. Based upon, I mean, again, just looking at the London market and seeing how multicultural that has become, there is the tide is turning, right? What do you see with regards to the conversations that you're having?
Yeah, I think it's similar to the myths we just talked about. Really, I think it is a cultural thing, as you kind of pointed out. Banks were traditionally, white males, privately educated, in that kind of club almost, and there still is a bit of that, but they are changing. Bank of Ireland, Francesca McDonagh was appointed last year, so we are seeing that kind of, I suppose, start to change. The thing that stood out to me an awful lot in the blog was the stats around it was pretty much 50-50 male female at entry level, and it drops dramatically to 80-20 male female at C-suite, which is just staggering, to think that there can be that much of a drop off.
What do you think that has to do with?
I think there's a whole load of things. I mean, when we did our diversity report, we did an episode with Vessi and with Lisa Weiss, and we kind of talked about a lot of these systemic issues that are there. And I think a lot of those are so deeply ingrained that it's going to take a long time for it to shift. I think, women need to see other women doing well. And I think that helps an awful lot. And I think it shows, young women coming out of college in particular that, there is a career path for me right to the top. So I do think that's important. I think, they need to be shown or need to kind of see that they can take a little bit of a risk sometimes. I was in the Professional Women's Network in State Street when I was there, and one of the things that kept coming up repeatedly was that men are inclined to throw in a CV when they think they hit maybe 60% of a job spec. Yeah. Because women need to be a lot more comfortable, typically, that they're covering 95% of it, or they won't throw in a CV. So there is that kind of attitude almost that needs to shift, but I think needs to be encouraged. We're obviously in recruitment, and we're always asked for 50-50 slates. So male-female candidates for a shortlist. And it is tricky because, the pool of candidates, particularly in technology, just doesn't exist. So it's hard to do. But things like the 50-50 slate, I think, will encourage more diversity, will encourage people to look at more of a diverse slate of candidates, and will encourage that and help things kind of flow through.
Okay, that makes sense. Number 3, people don't change their bank account. That people are switching to Starling, Monzo, Revolut, TransferWise, others for financial service. I know one for me, I can't wait to change my bank account. I have been with one Irish bank for a very long time, who shall remain nameless. I'm looking at the entry of new players, new providers coming to Ireland, and making my decision on which one that I'm going to move over to, just because with my business account, with my business life, with my personal accounts and my personal life, you just want some level of cohesion there, and I'm having a hard time getting that. But it's hard to change your bank account. I'm looking at the list of direct debits that are in my personal account now with my Irish bank and thinking, Jesus, how am I actually going to do that? Yeah. I tried to do that with one, right? And this was just for, I think, my monthly car insurance payment. And because it's paid for monthly rather than all in one whack, that whoever's providing that financing agreement said, sorry, we can only take IBANs that begin with IE. Right? They wouldn't let me switch to use my N26 account, which begins with a DE, because it's a German bank. And so I had to go back to using my Bank of Ireland one, right? So, I just gave it up there. But anyway, it is hard to change your bank account. People, what Chris Skinner is saying is that it is not a myth. People don't change their bank accounts. If you look at the numbers and how they stack up, I think it's something like, 25% of millennials now are using these challenger banks, neobanks, whatever you want to call them. It's another 75% of what should be the early adopters that are not using them, right? Just because it is hard to change your bank account. Yeah. What do you think?
If I think about my own situation, so we have 2 bank accounts. I have my personal one with an Irish bank, and we have a joint account with another Irish bank, and I have a Revolut account. I'd love to switch over to Revolut or something similar because it just works and it's just easy and it's so straightforward. But I think there's the thing about kind of closing your bank account almost in Ireland. It's like an old school kind of, you don't close your bank account and need that relationship there when you get a mortgage and all that stuff. But I don't think that's necessarily true anymore. Yeah. So I think all of those myths, they're going to start to get busted an awful lot more, and people are going to see that you don't necessarily need to have that relationship with your bank since you got your confirmation money, like I did, or do, because it doesn't really matter, So I wonder, do people switch, or do people just kind of naturally stop using an account? So if I think about how I use it now, I get paid or pay myself into my AIB account, and I transfer money from that to my Revolut.
Yeah.
But there's more and more money going into the Revolut because I'm starting to use that more and more. So I'm pretty sure eventually I'll start just transferring directly into Revolut. AIB will tail off. I'll start switching direct debits and all of that. But that's how I see it happening for me.
I know. Yeah, when I can switch over the direct debits, I will. But it's a piece of work. There is some service in the UK where that's supposed to make it easier for people to do that, where it will automatically switch over all of your direct debits. I'm like just waiting for that to happen here. Myth number 4, new banks don't do real banking. I think this comes down to the business model, right? And that the newer banks are providing current accounts, right? Where they take your cash and then they let you take it back, right? Not paying you any interest on that, but basically they're just what they're paying for by the fact that they're providing you with this service. Sometimes, they'll get you for the $5.99 a month or $10.99 a month if you want to go to the premium service or get the metal card or whatever it is. But generally it's that, the total banking model involves not only just providing current accounts, but also providing lending, right? And that's the model, is that you should be making more off the interest rate that you charge those to borrow money from you than what it is that you pay people to deposit money with you. Now, none of these challenger banks are obviously, and most big banks as well, are not paying anything for the cash that you deposit with them. But the reason that they're able to provide you with that service, the big banks are able to provide you with that service, with that deposit account, the current account, is because they're making money on the lending side, right? So myth number 4 is just that new banks don't do real banking. They are just doing current accounts. To me, that's a service. It's take my money, hold it in trust, and give it back to me when I want it. And in the meantime, you can do what you want with it. Because I see that you, N26, have a banking license, or Revolut have a banking license, or Starling have a banking license, and that there is some deposit insurance, right, on top of those accounts. What do you think about the big banks?
I think what the challenger banks currently do, they do really well, and they do better than the big banks. So, you go for a meal, you want to split the bill with someone who has a similar challenger or the same challenger bank to you. You can pay it with your card, you can tap the app, you can ask for money to be transferred. It's really quick and seamless, and it's instant. You're not waiting for days. You're not trying to get IBAN numbers off someone and all that kind of messing. Or, because I very seldom carry cash anymore. I just don't use it. So I think that's kind of the first point. And I wonder, the other services like your mortgage or your car loan or your overdraft or whatever, I don't feel like they're tied to your account anymore. Certainly anything I have isn't with the bank that I would have my current account with. So I don't think there's that kind of lock-in almost. And any of the banks that are set up here, any of the challenger banks that are set up here, or any of the others that I'm aware of, certainly have more expansive licenses than Just E-Money or are going through that process. So I'm sure it's just a matter of time before those additional services start to get added on.
I gotcha. Makes sense. We see providers coming to market where all they're doing is lending. Yeah. Right. So we had Chris Koikon from Flender a long time ago, and that's all that they do is just lending. Right. But there's a business model there for them that works in terms of the money, the funding that they get to then turn those loans around at a higher interest rate. I'd love to see some of these, start to come together. Right. I think we'll get there. Myth number 5, small businesses need branches. And you kind of touched on that a little bit, that, what was that relationship like back in the day where you would go in to talk to your branch manager? Yeah. And that if you went to talk to your branch manager in this one branch and they said no, you'd go talk to another branch manager who your mother or father may know a bit better, and they would say yes, right, to get a loan or get something like that. The myth is that small businesses need branches to run their businesses effectively and be able to have that type of relationship and that type of trust to get access to capital. I think long gone are the days where small businesses are only really using banks to get their funding. To me, there's a couple different types of small businesses, right? There's the mom and pop shop, right, that are, will get to 1 million in revenue per year perhaps, and then struggle to grow from there. And then there's the emerging tech companies, right, that are going, shooting the moon. Getting your branch bank manager in to provide you with funding in that second case, in the emerging tech side, that's not going to get you very far. It may fill the gap for short-term liquidity needs, but the mom and pop shop, that's pretty important to have that. And we saw in the blog post that there's a group in the UK, Lloyds, Barclays, and RBS, partnering together to launch a joint venture to service small businesses through physical hubs across the country, right? And that shutting down all these branches has an impact on the small business economy. I don't know if that is or isn't the case. What do you think?
If we think about our case, so we're going into our 5th year in January, and I've been into a branch for business purposes twice, one to open the account and one to sign a letter for an overdraft, and that was it. And I didn't want to go in. If I didn't have to, I wouldn't have bothered. I don't think it's a case anymore, and I could be wrong, but knowing what I know about banks and branches and stuff, I don't think it's a case that the bank manager actually makes a lending decision anymore. Yeah. They decide to send it to underwriters who are decentralised and, sit out in wherever they sit.
Yeah.
So it's not like you have a team of underwriters there who like you, know you and whatever. And thank God, because it used to be the days back with Anglo and your man has 3 Mercedes in the driveway, and of course we give him a few mil.
Yeah.
Thank God it's gone.
Yeah.
I think, if you're a cash business, maybe it's a little bit different, but again, banks are getting rid of all of their cash and coin business now as well.
Absolutely.
So it's harder to deposit, and the quicker we move to card payments and e-money payments and all that stuff completely, then the better.
I think one thing perhaps holding us back a bit in Ireland is the wet signature. Right,
yeah.
The wet signature rule is still a requirement here, and that really slows things down.
Yeah. But for something like that, you can see how a blockchain solution would really fit in quite nicely if you think about
Absolutely.
I was at Block W there last year, the one they did. I think you were there. They did around aviation leasing and aviation finance. Yeah. And they were talking about having some people waiting outside banks in Asia to get physical contracts or deeds of trust or whatever for transferring ownership of airlines. It's just crazy. It's just absolutely crazy that you have to do this stuff. But it's going to take time to change. But,
we'll get there.
Yeah.
We'll get there.
Hopefully.
Myth 6, big banks will catch up. And that look at how quickly and with such agility that the challenger banks, the neobanks, as they call them in the US, have moved. The big banks will figure out how to do this. To me, this is really about, I talk all the time about the Innovator's Dilemma, which is a Clayton Christensen book from about 20 years ago now, which says the only real way for a big business to do something with true agility, to build a new business model, to build new revenue flows, is to do it off to the side of the business, right? You're not going to be able to do this within the business. We've seen time and again over the last number of years how some of the bigger players have tried to do things, particularly, maybe not specifically in banking, but with wealth management, where UBS as well as Investec have both just flushed their robo-advisory services because they couldn't get to market with it in such a way that was profitable for them. Seeing the bigger players trying to do these types of things, one of them, I think it was a banking product that one of the big banks launched, a challenger banking product, and it didn't ultimately go anywhere. But I just don't see them the big banks being able to move the right pace to be able to operate truly in the digital space.
Yeah, I agree. I think there's so many legacy issues.
Yeah.
Even just around technology, core banking platforms have changed so much. And, if you go into any bank now that was running on a legacy system with bits added on and bits added on outside of that, it's just a complete mess. Yeah. And it takes so long. Even, you've talked to loads of startups and entrepreneurs selling into banks. Procurement cycles are anything from kind of 12 to 24 months. Yeah. So if it's going to be 12 to 24 months to get something done or decided on, or even to figure out who the right person is to talk to, then I just don't see it. I just don't see it. But I think there's real opportunity there, though. Obviously for challenger banks, etc. But there's certainly opportunity for companies who can offer kind of white label solutions for these banks if they can talk to the right people and get them to move at a quick enough pace.
Absolutely. I think is what the big banks, what they do have is they have the big balance sheets. When they start, we talked a few minutes ago about the challenger banks starting to provide lending. The big banks have the ability to do that, but I've just seen, like you're saying, there's the procurement cycle, but there's also then the personality side of it, right? When you are a product manager within a big bank, when you are a business development person, head of a big sales cycle as part of a big bank, you are taking personal risk by going out of the line and saying, let's create a brand new revenue flow that could potentially cannibalize what we're doing right now, right? And being able to take that risk and having that appetite to do that, you commonly don't find that in the corporate world. Generally, the people that are like that will leave within the next couple of years to go launch their own business, right? Anyway, last one. Digital banks aren't profitable. Chris Skinner's short comment was, so far, so true, right? That if you look at the Monzos, the Starlings, or Revoluts of the world, they are all burning a lot of VC money, right? And not burning it. Well, some are burning it, but some are saying, obviously, that is the path to profitability, is to be able to spend and grow and accelerate. I think that, to me, I'd agree that they're not yet profitable. But if you look at one that is a bit of a curveball, if you look at Coinbase, I wouldn't call them a challenger bank, but they're definitely providing and building, a new open financial system, right? And what is a bank? A bank is a key part of the financial system. And Coinbase have been profitable for the last 2 years, which was an interesting thing that their CEO, Brian Armstrong, shared, I think, in the last month or so. So that is probably a view into new finance and new technology and where things are heading in the digital world and blockchain and things like that. But so far, I think that's Ann Boden was right. She's saying it's a myth. Digital banks aren't profitable, but yeah, it looks like so far so true. What do you think?
Yeah, well, I mean, the numbers don't lie. They're not profitable yet, but you can see where the potential is. If you can get X 100,000 or X million users and start to turn a profit or start to generate revenue from those, then you have the scale, I suppose, of that kind of user base to be able to drive significant revenues.
Yep.
So surely that's the play for anyone in that space.
Overall, when I look at all this stuff, Paul, what I'm really looking forward to is seeing some of these things come together. And how what had been a venture capital topic for a while now in funding these challenger banks is how that will eventually become a private equity story in terms of moving to, okay, you are now profitable. You are now approaching 5 to 10 million per year in EBITDA. And perhaps we see a path to you getting to 100 million in EBITDA. Let's have a big private equity company make an investment there. And then based upon that own private equity company's specialties, would there be others in their portfolio or others out there that they would look to say, let's bring a Monzo and an N26 together, or a Starling with an Umba, who are providing micro lending in Kenya, right? And is there an opportunity here to bring some of these business models together? I think it's going to be interesting.
They're global platforms. Yeah. It's not like it's a bricks and mortar type of thing like banks used to be years ago. So if they can get over regulatory hurdles and get licensed globally, then it's quick. Yeah. There's nothing stopping them.
Yeah. All right. Well, I think we will cut it there. Thanks to Ann Boden and Chris Skinner for neither one of them being in the room with us today, because they'd probably pick a fight with us on a couple of things that we talked about, which is great. And I will eventually meet Ann Boden, I fully expect, because of what they're doing here in Ireland. I've met Chris Skinner before. He's a great guy, like I said. So, but Paul, thank you for coming on the show.
Thanks, Pete.
Great.
Money never sleeps, pal.
That wraps it up, folks. Thanks to listening to Paul and I try to figure out why the world does what it does. The links for the stories we covered are in the show notes for this episode on moneyneversleeps.ie, so check us out online. Remember, if you or a colleague need help attracting or retaining great talent for your fintech or financial services company, it is highly advisable that you build a relationship with the team at Top Tier Recruitment, as they really know their stuff. You can find them at toptierrecruitment.com. Also, thanks to Conan Brophy from Create Sound for editing and recording this podcast. As for me, I increase the odds of startup success. Get in touch through the contact page on norioventures.com, and you can follow Owen on Twitter at OwenFitzgerald9. Finally, till next time, thanks for listening. See ya!
Money never sleeps, pal.